Welcome to our presentation today. My name is Timothy Schubert and we are Blue Diamond Documents. I've been in the retirement industry for over 25 years. I founded Blue Diamond Documents in 2010 and since then we've created over 2,500 IRA LLCs. Not only do I help people get checkbook control of their retirement funds, but I manage multiple different self-directed IRA LLCs, each having different alternative assets in it, like rental properties, precious metals, car loans, promissory notes, raw land. I've educated thousands of people over the years on how to get checkbook control and the power of self-direction. Today's class is for informational and educational purposes only. Everyone is encouraged to consult their attorneys, their financial planners, and accountants before entering into any type of investment. We think it's a good idea for you to take notes. And the reason is your accountant or financial planner, they might not know this strategy, and you may need to educate them on how it works. Your financial planner was trained to sell you stock market-based products like CDs, bonds, mutual funds, and stocks. And also, it's important that you know the rules, what you're allowed to do and not allowed to do. So it's important you take time to take notes. These are the three things that we hope you walk away with a better understanding. What is a self-directed IRA? What does the government say about what I can invest in and who I can invest with? And finally, what is checkbook control and how do I get it? What is a self-directed IRA? If we look at Publication 590, a federal government document that they put out describing retirement accounts, it will never mention the word self-directed IRAs because it's a marketing term. And it depends on who your custodian is to determine what a self-directed IRA is. It means something different to each custodian. And we're limited to what we can invest in by who we park our IRA account with. Some custodians that offer self-directed IRAs, it might only be stock market-based products, CDs, stocks, mutual funds, and bonds, but they're not helping you decide which one to get into, so they call it a self-directed IRA. Some custodians will call it a self-directed IRA, but they only allow you to buy certain bonds. So a self-directed IRA depends on what it means depends on what custodian you park your IRA with. A little bit about diversification. It's over $42 trillion as of December 2024 in retirement accounts. The majority of those funds are invested in mutual funds with brokerage firms. It is estimated that less than 3% is invested in alternative assets. That means 97% of $42 trillion is in the stock market. The federal government has been, for many, many years, trying to figure a way to manage IRA accounts for their citizens because there's $42 trillion in there. It's important that we take control of our retirement funds. The first thing we want to look at is what is out. You see, the government has never produced a list of assets that you can invest in. It only told us what is out. You're never going to find something that says that you can buy stock market-based products, even though 97% of all retirement accounts is in the stock market. But there's not a list of stocks or CDs or bonds or mutual funds that you can invest in. The government has only told us what's out. And what's out is collectibles and life insurance. These are the two asset classes that they have identified that you should not invest in, collectibles and life insurance. They've defined what a collectible is to some degree. Artworks, rugs, antiques, metals, gems, stamps, coins, alcoholic beverages, it says. I tell my clients, if you think it's a collectible, they probably will too, so stay away from it. And then your IRA should not be the beneficiary of your death. Your IRA should not pay for your life insurance policy. These are the only two things that are out. So if they're out, what's in? Well, it's a pretty big list. Rental properties, raw lands, commercial properties, any type of real estate is in. Lending money, hard money loans, promissory notes, car loans, foreign properties, foreign currency, cryptocurrency, tax liens, personal loans. Again, it's a pretty big list of what you can invest in. What are you an expert at investing in? And why are you not using your IRA at it? If you know real estate, because that's your expertise, why are you not using your IRA to invest in real estate? Next, we want to discover who is out. Internal Revenue Code 4975 says that your IRA cannot engage in any transaction directly or indirectly with anybody or anything considered related to the IRA. Some examples of prohibited transactions between a disqualified person and an IRA are selling, exchanging, or leasing. So we know we can buy real estate, we know we can have rental properties, but we're not supposed to lease to someone that's on the list that's considered a prohibited person. We can lend money, but not to a person that's on the list, a prohibited person. Two key points with IRAs and self-directing: no self-dealing and no personal use. Self-dealing is, I can buy real estate, I just can't buy it from somebody that's on the list. I can sell my real estate in my IRA LLC, but not to someone that is a prohibited person. No personal use. What does that mean? That means I can have rental properties, but I can't rent to somebody that's a prohibited person. So that's who's out. Now, who's on that list? On the list of disqualified persons, the first person on the list is you and your spouse. You cannot engage in a transaction with yourself or your spouse, lineal ascendants or descendants. What does that mean? That's straight up and straight down. That's my children, my grandchildren, my parents, and my grandparents, and all their spouses are on the list of prohibited people. Any fiduciary of my IRA, that could be like your custodian is selling shares of their stock. Should you buy into that? Probably not. Anyone providing services to your IRA, like your financial planner. Your financial planner knows that you're allowed to lend money in your IRA LLC, but you shouldn't lend to them if they're giving you advice. And then corporations, partnerships, trusts, estates, which you own directly or indirectly at least 50%. You can invest in corporations, partnerships, or trusts, but you can't into one that you own 50% or more. So how does it work? How does a Checkbook IRA LLC work? First, you own the IRA account. You open an IRA at a custodian. You transfer money or roll over money to that self-directed IRA custodian. We create an LLC for your IRA to invest in. You give all those documents to the custodian. You give them instructions that you want to invest into this LLC. Your custodian will write a check out of your IRA account payable to the LLC. You then take that check into your local bank. You open an LLC checking account with its own tax ID number. You deposit that check your custodian gave you into that LLC checking account. Your banker hands you a checkbook, and now you have what we call checkbook control of your retirement funds. Now, back at the custodian, you didn't close your account even though you took all the money out of that IRA account. On their books, you have an LLC. Now, you have an LLC checking account with all those funds in it, and when you're ready to invest in whatever asset you choose, in this example, it's a promissory note and a piece of real estate, you write the check. You don't have to ask the custodian about investing in any type of asset. You're responsible as the manager of the LLC, and everything you invest in, you do it in the name of the LLC. The title, the promissory note, everything is in the name of the LLC, never in your name. You're the manager. You don't own this LLC, your IRA does. You manage it and control it. Now, when there's rental income or expenses needed, it comes in and out of the LLC checking account. The expenses to pay for a plumber, you write a check out of the LLC checking account. When rental income comes in, it goes back into the LLC checking account. This is how Checkbook IRA LLC works. Let's have a brief example of what it might look like. Leroy invested his IRA into a rental property in Arizona. He purchased this property for $135,000. The property required $20,000 for repairs and cleanup. He rented this property for $1,200 a month. He held the property for 5 years, and then he sold it for $225,000. His initial investment was $155,000. The rental income for 5 years was $43,200, and the proceeds from the sale was $70,000. Expenses, insurance, and upkeep were $15,000, and so his return was $98,200. Let's look at what it would look like for a promissory note. Deb created a promissory note with her niece and her husband to lend them money to buy a car. The loan was for $12,000 at 12% amortized for 36 months with monthly payments of $399. It yielded a return of $2,349. You can lend to a niece. They're not on the list. A lot of people will say, I can't do business with family members. And that's not true. You can't do them with lineal ascendants or descendants, your children, grandchildren, parents, grandparents, but you can do business with aunts, uncles, cousins, nephews, nieces, and even siblings. In summary, you're limited to what you can invest in your IRA in by who you park your IRA account with. If you're with a custodian that limits you, then you can't invest in an LLC or real estate or alternative assets. It is possible to invest in assets other than stock market-based products, and you can have a checking account that is linked to your IRA funds that you control and manage. We appreciate you taking time out of your day to take a listen to what is a self-directed IRA. For more education and information, we invite you to visit our website, bluediamonddocuments.com. Give us a call or send us an email if you need more information. We hope to hear from you soon. Thank you for being with us today.